The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, looking good. Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. We'll start out the show like we usually do. FTSE 60-minute, as you can see, we had a huge break, stopped right above the 61% retracement of this first swing. And then, of course, when we're going to pull up the German DAX, you're going to be seeing pretty much the same pattern, only it is a little weaker. And as you can see here, we've sold off quite a bit earlier today, considering that we went straight up in stocks. Folks, this is what we call an AB equals CD kind of week, and we're going to go into that in just a minute. But let's take a second here to talk about what Mr. Z posted yesterday on. I've had several questions about this, and that's why I wanted to cover it. He was showing the ellipticals, the equinoxes and solstices, and how they related to these market things. So all we're looking at here, folks, is cycles. You know, we don't know whether they're going to be highs or lows sometimes. We really don't. But what we do know when we're looking at these patterns is we do know that they're going to be able to tell us that this is what my risk is, to see if I'm going to be able to either be a buyer or seller. I mean, they have some predicted qualities, but the main quality of a pattern is the fact that they keep you in the ball game as far as how much you have to risk, and that's what it's all about. A perfect example of that was when we were in the Treasury bonds. If you'll remember, the Treasury bonds were certainly not acting very bearish. You know, they've been bullish. They had higher bottoms all the way since the 23rd of March, had a higher bottom in May, higher bottom in June, and then we had the big ABCD pattern to the upside there at 62.22, and that's where we decided to sell it short. We didn't know it was going to go any higher than that. It went 10 pips higher, and now it's dropped well over $3,000. But we don't know whether it's going to be well, now it's going to be a winning trade, of course, but we're suggesting that the next time you see a pullback on this, we'll be watching for a retracement down to that 58.16. We're not very far away. We're trading at the small end of the 159 level. So that's what these patterns are all about. You remember this week, I think it was on a Monday, I gave the story of the fractal analysis of Benoit Mandelbrot. Mandelbrot is the father of fractal analysis, folks. He wrote this book in 1974. And there is a theory of why everything works the way it does. Mandelbrot looked at cotton prices over a 40-year period, and he found a small pattern he called the lightning bolt pattern. Well, this lightning bolt pattern was also found by H.M. Gartley in 1937. He didn't know anything about fractal analysis, but he knew AB equals CD. If you have higher bottoms and higher tops, you're in an uptrend. Lower tops, lower bottoms, you're in the downtrend. I don't know much about algorithmic trading, but I would bet a nickel to a donut that these things are used in those algorithmic programs, because you see them working all the time in the market. Not every time, but all the time. So that's what we're watching here, is we're looking at the ABCD pattern, also known as the Thunderbolt by Benoit Mandelbrot, the father of fractal analysis. And folks, that is a really smart dude. That book is a very, very popular book, along with several of others that he did. Looking at that pattern, let's just look at it. This is what we talked about Monday, that the market didn't look very bearish at that point. You had a big ABCD there right at 33,000, and the market just ran right up and has had one heck of a good rally. We made a 50% retracement of that whole move in a matter of just 3 days. So that tells you the strength of that market is quite strong. So those are a few of the things that we're watching as we look at some of these things here this morning. We have a bunch of them, but the one that brought everybody's feathers up last night is, of course, I sent this out in the middle of the night, it must have been around midnight, 10:30, 11 o'clock Tucson time. I sent the picture out of the ABCD pattern a la Mandelbrot. And you can see here, this is the NASDAQ over the last 12 days. You can see the multiple ABCD patterns forming up there. You can see 143.19. The high was 143.15. And what we're looking for is to see whether that's going to mean anything or not. If we look at this on a daily basis, and we'll look at this on a daily basis, you'll see that on a daily basis, it goes back over a 4-month period. You'll notice from the high to high to high is equal in time. In other words, each high is equal in time, which happens to be, I believe, 2.5 months. So that's what we're watching here. And you can see the small, I've drawn them in with the black and the red things. You can see the smaller ABCD patterns that are coming in. What this means is we've got a whole bunch of them coming in. Does this mean this market's going to be a top? I don't know. We really don't know. Bo is asking, can you put a lightning bolt on July Platinum? Well, I believe I can't. Yes, I can, but I can't do it live. So, Bo, if you'll bear with me just 1 second, I think we can get this up here and you'll be able to see it without too much trouble. And here we go. All right, Bo, here you go. This is right out of the newsletter on Sunday, and we were looking for the market to go to 1020. The low was 1020. We got lucky on that one. So it hit that, and it looks like it's getting ready to rally. I think we've already rallied quite a bit from that level already. I'm not exactly sure where platinum is because I don't trade it, but that is the ABCD pattern, and that's just a longer time frame. So that's it. Oh wow, 1090. That is a big jump. Yeah, thank you very much. Yeah. Well, we've been thinking that the gold market had a really good chance to bottom, and all we were doing is waiting to see if we get some type of a very, very easy place to look at it. Today was a very important day in gold. Let me get the gold up here since we're talking about it. You see the gold, the 61% retracement in gold came in at 1769, okay, and the market went down to 1763. Now what we've had is we've had a $32 rally off the bottom, which is the harmonic number in gold is 32. We see that number all the time. You add that, and that takes you to the high that we made today at 1795 or 96, I believe. Now that is really important, folks, because we have rallied very, very strong this week, and that tells us we need to be watching to be a buyer of gold on the pullback. So what we're waiting for now is going back to Mandelbrot, find that little ABCD pattern, and when you find that one, it allows you to tell you how much risk you're going to take, and you don't have to worry about the profit. Remember, winners think how much money they can lose. Losers think how much money they can win, a la Las Vegas, and you don't want to get involved with that. So keep that in mind. By the way, our guest today will be Jeff Huge and of Alpha Insights. And tomorrow, folks, we've been waiting for this for 3 weeks. We have Tommy Terrific, Trader Tom Hugard will be on talking to us about the 72-week cycle that he talked to us about 3 weeks ago. And guess what, boys and girls? We are in week 72 as we speak today. So we're going to be watching this very, very closely because it's got a lot of things happening with it. When we get back from the break, I want to take a minute or two just to talk about the weather market and also the December corn, because that's a very interesting pattern that Mr. Z has brought us to our attention today, and we want to watch it very, very closely because I think it's something interesting. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, Mr. Z has furnished his chart of December corn. As you can see here, we are trading around, was the close of yesterday, 532. You can see the AB equals CD pattern from the 638 top down to the $5 rally up to 628. That takes us down to 495. If December corn goes below 525, the low today has been 528.5. which happens to be the exact 78% retracement of that low we made several weeks ago. That means that we are going to go down to 495. But right now, what we're looking for is to see if that number holds at the 528 level. So the reason why we're looking at that is if you go down to a daily chart and then move over to a 4-hour chart or a 60-minute chart, you can see these smaller patterns. Remember, Mandelbrot said that these patterns all have the original seed, and the seed is the ABCD pattern. What we do is we take the ABCD pattern and we take the numbers of the Fibonacci summation series and numbers of sacred geometry, the square roots of 5, and we try to find relationships between those waves that tell us that, yes, this looks like the place where we want to be a buyer of corn. And today that number came in at 528 on corn into December. So far, that's been the low. And the good part about that, folks, you're looking at a contract that's worth about $28,000, and you're putting a 4-cent stop on it. So you have a $28,000 contract that you're risking $200. You become a farmer for $200. Shut the front door and raise the rent. You don't have to be a rocket science to figure out that's a good trade. Because that's all it's doing is tell you, maybe it stops. Hey, we're in the midst of the worst weather market we've had in probably 8 or 9 years, and it's getting worse. Portland was 106 yesterday or supposedly today. I couldn't believe that when I saw that. Seattle is over 100 degrees. I know there's no beans in Seattle and there's no corn in Seattle, but it's representative of what that high pressure system is setting over the top of the United States. And if they don't, if it continues there and they don't get any rain, we're not even at the 4th of July, folks. That's not till next week. The corn must be as high as the 4th of July as an elephant's eye. Otherwise, you don't make the crop. So, we're a long way from that. And beans don't tassel until, or develop until, the first week in August. So there's a lot of things going on. In fact, that China's been buying. These prices didn't get to 638 by accident, folks. There was a lot of people buying it. I know that's helped the inflation program a little bit, the fact that they've sold off more than $1 a bushel. But these are markets that are not for the faint of heart, folks. They really aren't. Hold on. We got somebody calling in here. Portland is going to be 82 today and 106 on Sunday. Mr. Robinson, Mrs. Robinson's husband, Marshall says it's 82 today and 106 on Sunday. Now that is a really you're talking 5 days away. I don't know if they can make those forecasts. I saw it on the news, but I don't know whether it's going to do it. But there's a heat wave up there, folks. That's the bottom line. We have fires all across the western United States. We've got them here in Arizona. We've got them in California. All that stuff is, burning up. But, hey, look, folks, I shouldn't even be talking about this stuff because I'm a technician, folks. I rely on one thing. If you remember the movie we always talk about, City Slickers, when Jack Palance said, one thing, just do one thing. At the end of the movie, he finally tells Billy Crystal, well, what is the one thing? And he said, do one thing right and you're going to be okay. Well, I do one thing right. I look for A, B, C, D patterns. They tell me what I want to know. They can lie to you. They can cheat you. They can give you fake news, fake information. But if there's more buying, prices are going higher. If there's more selling, prices are going lower. That's really all you have to worry about. And that's what I try to do here at TFNN. I have people, and I respect this, and I expect it. I enjoy it. They come in and they say, how could you ever, do a trade like this? They did this this week on a couple of them that were big winners. One of them was the Treasury bonds. I mean, bonds have been going up. I mean, you had to be crazy to fade that thing because it was going straight up. I mean, it was a 3 drive to a bottom, and all we were doing was seeing the end of it. That's all we were doing. Okay. Someone's saying, please keep that a secret. Folks, there's no secrets in the market. This thing, that ABCD's been around since the Sumerians were putting it on tablets. That's really, that's all it is. Nothing more than that. You remember Andrew Lowe's book, the non-random walk down Wall Street that he wrote in 2002. But he goes through all of that. That's one of the major patterns that he looked at. He looked at head and shoulders. So he looked at the mathematics behind that, double tops, double bottoms, pennants, flags, all of these different things. The one that's the most interesting is the fact that it's the ABCD, but that Mandelbrot liked it. If the father of fractal analysis liked it, it must be something pretty good. So that's all I can tell you. All right, let's get back on to the program here, and we'll see what we're doing here with these markets. Give me 1 second, folks. I need to check in because we have a situation going here. There's what we want to see. Yeah. Okay, good job. All righty. Keep a very close eye on the crude oil today, folks, because if we get down below $73 today, we had a high of 73.30. If we get below that, that made a 3 drive to a top pattern on the hourly chart up there at 73.20 today. Excuse me, 74.20 today. We're trading a little bit below that, but that's going to be important because we close below 7,300. That means that it's broken below the first harmonic number of 88 pips, and that'll tell us that we're probably getting ready to see some type of correction. Whether it's going to be, hey folks, I am not saying this is the high in the NASDAQ. I am not saying that at all. I'm saying it's a high. And that's a big difference between the two. What I do is I look at these patterns for risk control. I keep bringing this to your attention, but only because it's important. That's what it's there for. Does it have predictive value? Yes, somewhat. But the main thing is it allows you to say, how much do I have to risk to see if this is going to be correct? And that's what I'm looking at. See, when I'm watching corn, this is what I was looking at in the corn market today. I don't have the crude oil chart right now, Maria, but I'll do my best to get it. You'll see here where we have this little black area, the black line and the red line meet there at 528. 528 was an exact 78% retracement of the low that we made back on the 24th of May. That's a perfect 78% retracement, folks. So you buy corn at 528 and you put a $2.50 stop on it to be a farmer. Now it's already moved, 6 cents in your favor. So now you're free as a farmer. You put your stop at break even. If it goes down and takes you out, then you're not risking anything at all because you've already made your first profit objective. So now you want to see if you can get into a free day. Hey, maybe it's going to be lucky or not. I don't know. That's it. Well, we'll see. Maria, Maria's asking a question about the crude. Watch the crude oil. If we go below 73.39. If we get below 73.39, that's going to be the first indication that there's something not right, because it in a really strong. Hey, folks, this thing has been up for how many days in a row? Hello. I mean, this is not where you want to. Well, you could buy it, I guess, but all I'm doing is looking at the patterns. That's all I'm looking at, folks. I don't know anything else to do other than that. Sometimes it works, sometimes it doesn't, but that's what we're watching. We're going to have Jeff Hughes coming up, Alpha Insights, and he had a great show last time, and he's got another one for us today, too. So stay tuned. We'll be right back. 877-927-6648.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
Tom O'Brien has just published his 1000th Gold Report. It's amazing to think that Tom has been writing his weekly Gold Report for almost 20 years. To celebrate the 1000th issue of Tom O'Brien's Gold Report, we've just launched a Tiger Dollar sale which runs for 2 weeks only through July 4th weekend. We've doubled all the Tiger Dollar bonuses, where you can now get up to a 40% bonus on your purchase. But that's not all. Inflation is here and the price of the Gold Report is going up after July 4th. Right now, you can lock in the Gold Report at the current pricing of $97 a month for as long as you remain a subscriber. This deal won't come around again. Get your Tiger Dollars today and apply them to the Gold Report before the price goes up on July 5th. Tiger Dollars never expire and are good for any TFNN newsletter or service as a great way to add savings. Head on over to the front page of TFNN.com for all the details and help us celebrate Tom O'Brien's 1000th Gold Report.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Jeff Hughes, Alpha Insights, on the line. Jeff, are you there?
I am here, Larry. How are you?
Well, I'm above ground, living the dream, my friend, but the problem is I can't find that original charts that you're going to show today. I've got the email and everything, but when I try to pull them up, it's not what I'm really looking for. I do have some charts here that I think are really interesting. Maybe we could talk about the SPX right now. Would that be a good one to start with? Okay, let's get this up here. I've got several that I want to question about. One of course, is your risk allocation thing that you were talking about. Go ahead, Jeff. You've got the mic.
Sure. So you want to talk about the S&P 500?
Yes.
We've been quite bullish on the S&P, and we think we've been in a lateral consolidation for really the last 3 months or so. I think that lateral consolidation is in the process of resolving itself to the upside. We've put out an Elliott wave count that really describes this most recent leg, and the pullback is wave 2 of wave 5 of a much larger cycle degree, wave 5. And so we think we're kind of just in the blast-off mode for a third of a third breakout here. And that should probably take us up into sometime in July, and then maybe another consolidation. And then we think the final move up will take us into, somewhere around the first week of August or so. And we think we're going to top out around 4,600 on the S&P. We get there a couple of different ways. We're using 2 technical projections. One's known as a measured move. You see the red arrows. We're taking the March sell-off of last year, and we're looking at that base as projecting above the breakout line or the prior high, which was February 2020. And that counts to almost exactly 4,600. We also measure an equal swings move, basically from the March low to the September high of last year, and project that off the October 30th low. And that also gets us to just about 4,600. And so between those 2 measures, we think it's a good proxy. We've actually used some Fibonacci extension math to come up with some additional targets. They start at about 46.63 and move up to about 4,900 in kind of 70 to 80 handle kind of moves. So there's a lot of potential for the market to go higher than that as well. But we think the starting point from here would be 4,600, and we think we can get there by August.
Well, that's good. The next one, Jeff, you've been so bullish for so long. We really appreciate your candidness when you give us these projections, because you've been spot on. But the one that really interested me today was your strategic risk allocation model. I mean, my goodness, this thing has been, had this market spot on, and it looks. Can you tell us what you're seeing here on this?
Yeah, so the model basically takes a look at an equal weighting of the S&P 500 and compares it to an equal weighting of the corporate bond market. So we take the 500 companies that are in the S&P 500, and all of them ostensibly have publicly traded debt. And so we equal weight that debt as well. And we basically look at the ratio of their stocks to their bonds, basically. And that ratio has been in a sharp uptrend really since the March lows last year. What we see here is, it's relatively extended. We've seen a bit of a pullback. And what the chart's telling you is that we're still in bullish territory. So we use basically 3 allocation parameters. The first one is when we're all in bullish, we want to be 80% stocks, 20% bonds. If we see a convergence between stocks and bonds in terms of their performance, in other words, if that ratio comes down and takes out those blue dots, that would be a neutral signal, and that would take us to a 50-50 weighting in our portfolio allocation. If we then saw further weakness, and presumably if we did see a lot of weakness, those red dots would start to spike up, and we would penetrate those red dots at some point on the downside, and that would take us to a 20% stocks, 80% bonds rating. But we are nowhere near that. We're not even within striking distance of the neutral signal at this point. So we'd have to have some serious damage done before month end in order to get a neutral signal. So we are not anticipating that. We are expecting the market to continue to move higher for a lot of reasons. And this model confirms it.
Well, this next one is really interesting for me, Jeff, because I didn't even know they had this symbol, and that is the New York Stock Exchange FANG Index, NYF FANG. Is there really, they have an index for this? They must
do.
have.
And really what it means, it's the FANG Plus Index, so it includes kind of the Jim Cramer's original FANGs, Facebook, Apple, Amazon, Netflix, and Google, plus NVIDIA, Tesla, Twitter, Baidu, and Baba. Notably missing from that is Microsoft, which just hit $2 trillion in market cap today, a new all-time record high. Now, what this chart is really telling you is that, that FANG group, those 10 mega caps that had been leading the market for so long, up until really late February of this year, has been in a consolidation. I would call that consolidation, something of a triangle, an inverted barrier triangle perhaps. But we're breaking out above that trend resistance line, or the upper boundary of that triangle. And if you take a look at the last couple of days, you would see that we've even pushed substantially further. And we're knocking on the door of that initial chart resistance level at about 7,100. Now, our work suggests that a breakout above 7,100 would confirm a new up leg in this advance, and it would project out to about 8,100 to 8,600 on the upside. Now, when I look at the FANG index, I think of the generals, right? Which means the rest of the market, like the NYSE or the NASDAQ Composite, these huge indexes with thousands of stocks. For example, the NASDAQ Composite has 3,300 secondary stocks that trade over the counter. That index just broke out yesterday to a new all-time high, and it made another new all-time high today. So I call that the infantry. And so now we have the generals and the infantry are marching up the hill together. They're storming this hill. They're going to take the hill. It's a bull market. That is, in my view, this combination of leadership by both the secondary stocks and the big mega cap stocks. And don't forget the king, Microsoft, right? Microsoft made a new all-time record high today. The king is leading the charge. His sword is extended. He's charging the hill, Larry.
He sure is. And also, we have a little break coming up here soon, but let's chat just briefly here about the Russell 2000. It looks like it's ready to break out, too, to the upside.
Yeah, I think it is. We presented this 2 weeks ago when we were on your show as kind of a symmetrical triangle, and we expected a breakout above the upper boundary of that triangle, and we got it. And it followed through and rallied right to the old all-time high. And there it stalled and was rejected in last week's shakeout. Now, we came down and we penetrated the 50-day moving average, but we have since rallied back. And in fact, the Russell 2000 is making further progress today. It's actually one of the strongest performing markets today, up over 50 bips.
Wow.
And my guess is we're going to challenge that upper boundary and break out in the next few days.
Okay, we're going to take a little break and stay with us, Jeff. Jeff Hughes, Alpha Insights, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're back. We're talking with Jeff Huge, Alpha Insights. Jeff, two interesting charts that you've got here that really are very interesting to me. And one is about the overall internals of the market. Do you want to tell the folks what you're looking at here?
We examine the breadth, the momentum, and the volume internals of the S&P 500. And with that, what we're looking for is we're looking for confirmation of trend or some kind of an overbought or oversold condition that would give us reason to believe that things are resetting. And what we saw last week was just an utter washout in breadth. Breadth came down, and it challenged the lows that were established both in February and then previously in the fall back in September, October of 2020. And both of those conditions resulted in sharp resets of the market and really set the stage for the next leg of the advance. And I think that's kind of what we saw here with this particular washout in breadth. What was also notable was that momentum is measured by the 10-day RSI oscillator, which is an internal measure of trend strength for the index. And it didn't quite get to overbought levels this time around in the last cycle, and that left a bit of a negative divergence in place, which, was a reason to be concerned. And what we saw this time was just an utter collapse in that momentum, but it did not get oversold, and we have not gotten oversold, and it's actually springboarded back in the last 3 days. So, our view is that this washout in breadth and momentum probably reset the market and put us in position for that next leg of the advance that we're expecting going forward. And the bottom chart really just looks at up-down volume, and obviously down volume just overwhelmed up volume last week. And that's rare when that occurs, and it again speaks to that reset.
Okay. The next one is really interesting, and that is we got the S&P 500 stocks that are above their 50-day moving averages. And my goodness, how can the stock market be going up with so many stocks below their 50-day moving averages?
Yeah, and not just that, but the average drawdown in the index is something like 8%. So, I mean, the average stock in the S&P 500 is down 8%, even though we're pretty close to these highs. But the reality is averages are kind of skewed, right? Because you've got something that's doing really poorly or something that's doing exceptionally well, kind of pulling the whole average up. What's a better measure is really median, and we're not seeing anything like that on the median. Here, the percent of stocks now above their 50-day moving average came down to around 33%. Which was very close to washout levels that we saw in the past. Again, looking back to 2018, 2019, of course, 2020, we had a couple of periods of that nature as well. And, honestly, when you get to this level of collapse in terms of participation is usually indicative of a low being established. And I think the bounce that we've seen off that, which isn't presented in this chart came out 3-4 days ago, based on last Friday's data, actually. And so you're not seeing the springboard back, but we're probably about 45% right now.
Wow. This next chart on investor sentiment, you've got these boxes marked off, and we're at 21%, which isn't even close to the other highs that we've had here over the past 7 or 8 months, isn't it?
It isn't. And what's interesting to me about the VIX is that, this latest spike higher last week was the, fifth lower high in a row, basically. And so when you see volatility spike up, you want to see it make higher highs to confirm that we're in a more significant level of deterioration or volatility acceleration. And here we're just not seeing it. I mean, we couldn't get up to, about 2/3 of where we were back in May and close to where we were back in February, March. But if you look back to October of last year, where things really got heated, we came in around half of that level of volatility. And it just it doesn't speak to me to suggest that we're in kind of this level of urgent or dire concern out there. In other words, it's a reset more than it is a reason to be concerned, if you will.
Wow. Okay, now the next one will bring everybody's attention level to about a 10, and that is the Treasury notes and bonds. We love the notes and bonds, and you've got a big hum up there. What's going on? Boy, there's been some wild action over there. So what are you looking here for yield, Jeff?
Yeah, so right now I think Treasury yields are around 145, give or take. And, there's a couple of possibilities here. The chart that we posted on Sunday night shows what appears to be a bull flag. And if, in fact, that is the case, we could see the rates market setting up for a March higher. And if we did see rates rally back through the upper boundary of that bull flag, well, you know what that means. We're going to be making new highs, and we're probably going to be knocking on the door at 2% in the not-too-distant future. If that were to be the case, I think that would have very, very negative implications for the bull market case for equities, and we may very well be wrong, okay? That would be the first indication. But what could also happen is we could see a breakdown. And technically, we did make a lower low last week with this, and so, one could make the case that this was some kind of a top formation, call it what you will, inverted cup and handle or something of that nature. And, further breakdown would suggest a countdown to about 130 on the 10-year bond yield. Now, what's interesting to me is that we also saw the U.S. dollar put in what appears to be kind of a double bottom formation. And the rally off those lows puts us in contention to rally into resistance. And the key will be whether or not that chart resistance holds. We could definitely see the dollar break out and rally higher. That would be very bearish for commodities and generally all dollar-denominated assets. That would be a strong case for international stocks if that were to occur. And, my thinking at this point is that the momentum underneath it is already breaking out. And so that's suggesting that we might get the dollar breaking out to the upside. But if you look at the momentum readings on the 10-year yield, they've reversed lower. And so we might actually see yields go lower, the dollar go higher. And that's what makes me go, I just don't know how to interpret that, honestly. I mean, we'll have to see. I think we just need more data on this one.
Okay. Now, you can tell the folks how they can reach you, Jeff. It's Alpha Insights, and your website is
my website's it's jwhinvestment.com. You can also email me at jhuge@jwhinvestment.com. I'm on Twitter at alpha_insights. And I'm pretty much all over the net, on LinkedIn, on YouTube, places like that. So you can find me if you look.
Hey, thank you so much, Jeff. We'll have you on in a few weeks. Great stuff. We really enjoyed it.
Always a pleasure,
Thank
Larry.
you so
Thanks
much.
for having me.
We'll be right back, folks. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks. Maria asked me to post a chart of the crude oil. You can see the ABCD pattern that we were looking at up there at the 74.20 level. There's also that 3-drive pattern over the last 3 days, measuring the 74.10. We've just reached the first area of profit on that, which would have been the 61% of the range of the last couple of days. And we just get there at 73.15. Anything below 73.15 now, folks, would be indicative that we're going to have a pretty significant correction in the crude oil. We've been looking at this, of course, on the long-term weekly for a very, very long time because of the ABCD patterns that are there. And we may be getting there, but it's still a bit early. We're only $1 down from the high, which isn't very much, but well, it is if you're long. It's good if you're short. But the key level that we're looking at right now is that $73 a barrel level. That would be down. If we get down below that, you're more than one harmonic down in the crude oil, and that usually means you're going to break. Just like we talked about that in gold today, the 17.95 being the harmonic number, and we're down $13 from that level already today. So these numbers do mean something. The question is, they don't work all the time. They do work some of the time, but they're the reason for your use is the fact that if you think what Mandelbrot did, that he had a seed, and if that seed is there and you can see it, you're in great shape. But if the seed starts to wilter, in other words, if the ABCD pattern starts to fail and you get beyond 1.618, there's trouble in River City, and you don't want to go to River City there in Gary, Indiana, if that happens. So remember, you're always there to use stops, folks. If you'll do that, you'll be far, far better off than if you don't use stops. That's the bottom line of what we're paying attention to here today. So let's keep in mind. That pattern now in the NASDAQ doesn't look too bad right now. It's down about 50 or 60 handles from where the sell area came in. But again, this is just, you don't know how far it's going to go. I mean, nobody knows that. It's just a question of what do you expect? And we'll see. 877-927-6648.
Building wealth trading in the stock market seems impossible to most